Hello, trading has closed on May 28, 2015. I'm Jeffrey Tennant. My last call said that there was a case for yesterday's high holding, but that unless we gap down smartly, I expected a slightly higher high. We got the gap down. I also was looking for lower prices today, which we got. These lines are mejt support resistance levels, which have been on the table since the middle of the month, and they still have worked. During the day, we had some mejt support levels which held. mejt says the rally is a false move and gives us a target of 2117.02, most likely to print tomorrow. That's really not too far from where we closed, but it could be significant because we need to gap up smartly tomorrow to prevent a big drop. This is basically 2 days in a row where we started out low and rallied all day. Starting out low and rallying all day is good, but it's not so good when you can't close over the early morning highs. It's a sign of weakness, which would be invalidated if we were to have a rally early in the day and promptly take out today's high and preferably yesterday's high too. Unless that happens, based on factors outside the system, I'd look for lower prices. So we have a lower mejt target, we have a mejt resistance level. We now have a Fibonacci resistance level. This is 0, 23.6, 38.2, 61.8, and 100. You'll see we're playing Fibonacci ping pong. We also have a diamond. A diamond is basically a negative pattern. It could be invalidated if we morph into something else, but it doesn't have to be invalidated. And if we drop, we have the potential for a diamond on stilts. If this wave count that I've proposed is correct, it would be a lot more pleasing to the eye if we had a stronger wave C up. However, if that's B, there's at least a valid count where that's A, that's B, that's C. C is a Fibonacci percentage of A, and if we drop down in spades, this rally could be over. I'd prefer that this alternate count be the one to work because I'd like to see a little bit higher prices, but I don't always get everything I want. The call for tomorrow is that we have a slightly lower price target, and if we don't promptly take out today's high, ideally by having a gap over it, we have a good chance of trading much lower than that. And that is today's call.